Hey gang, welcome to Time in the Market, the investing channel with a long-term focus. Doing a quicker video today about Crocs Inc. This is a company that I do own, so I'm glad that it's up 20% today on some news. They announced updated guidance for Q4 and also released guidance for 2024, and it's all pretty much good news. The stock was beat up in the last month, really in tandem with Nike. Nike released their earnings on December 21st, and it was kind of mixed in terms of the message they sent. They talked about a weakening consumer, a competitive marketplace, the need to make changes. And Crocs is really humming along despite what Nike said, given what they're announcing in their latest news release. If we recall their Q3 rather, earnings and their Q4 guidance, they were guiding for -4 to -1% growth for Q4, 4 to 7% growth for Crocs, and 25 to 20% shrinkage on Hey Dude. Now, after going through the Christmas quarter, they saw that things are going really well with Crocs. And if you kind of have nephews or nieces or know people that do, or even know people that are in certain industries, these are popular shoes with a lot of people, and they're selling like gangbusters, and that's showing up in their updated Q4 guidance. Now they're expecting actual growth of about 1%, Crocs brand growing closer to 10%, and Hey Dude's still shrinking, but only down about 19%, and all of those are ahead of guidance. On top of that, they're expecting operating margins to now be in excess of 27%, and on top of that, and this is good news for people who are concerned about their acquisition of Hey Dude, they're continuing to pay down debt. They paid down approximately 277 million of net debt, repurchased some more shares, and in essence paid down almost 700 million in net debt in the last year. And that's what can happen with a company like this one. And one of the reasons I like Crocs, and it's a company that generates a ton of free cash flow and continues to do so. Yes, the Hey Dude acquisition might have been kind of iffy if you think about the growth in the latest couple of quarters and the fact that it's slowing down. But they can acquire a business like that, not really mess up their balance sheet, and continue to invest in it and try to grow it. And in a year or two, they can probably make another acquisition. That's the interesting thing about Crocs. It's not just going to be the Crocs business anymore in the next couple of years. It's going to be more than that. And as they grow the Hey Dude brand, as they potentially acquire more stuff, this could be a really interesting investment. And if you look at what's going on in 2024, the 2024 guidance they're giving is actually really good to hear as an investor. I was actually expecting basically flat growth or maybe even shrinkage in 2024 when I priced this stock out. Now they're saying we expect revenue growth of 3 to 5%. And that's pretty good. And 4 to 6% growth on the Crocs brand and flat to slightly up on the Hey Dude brand. That's good news for investors who were kind of writing off the Hey Dude brand. I was a bit kind of concerned about it, but the fact that it's actually sort of starting to grow again, that's good news, at least as far as their expectations go. And the fact that their revenue in general is going to grow, that's also good news. They are saying they're going to make some investments into brand accretive and strategic SG&A investments. Their operating margins are going to drop a tiny bit, maybe from 25.5% to 25% in 23 into 24. Not huge negative news, but the fact that they're growing, the fact that they're continuing to pay down debt, that's really good news for me. And that I think changes my pricing assumptions about this stock. In the past, I was kind of thinking the fair value of the stock was closer to mid to high 90s. So if you're buying in the 80s, it was just in the 80s a couple of days ago, you're probably getting a pretty good deal. Now it's probably a bit higher. So even after this 20% jump, it might still be an interesting stock given what they're saying in today's news release. So as I look at the valuation, again, disclaimer, video is for informational, educational, and entertainment purposes only. It is not investment advice. Please do your own due diligence before making any investment decisions. So this is my last sheet. I kind of updated it for some of the debt pay down, but the assumptions are the same. Now, as I look at this stock, again, I had a fair value of about 97 bucks if you're looking for a 10% return, maybe 78 bucks if you're looking for a 15% return. And this is with a free cash flow yield assumption that's close to about 8%. And the market is giving this a pretty conservative free cash flow yield. If you think about a company like this, if this wasn't a fad that the market considers a fad, this is a company that probably should be priced closer to a 5 to 6% free cash flow yield, given the fact that they're continuing to grow into 2024. I won't make that assumption here, but there's potentially some upside from these pricing decisions that I'm putting in here. So as I look at revenue growth, I have 10% in here. It's probably going to be closer to 11% now for 23. For 24, 3 to 5%. I'm going to be conservative and stick at 3%, and then kind of leave 3% growth, shrinking down to 2% into 2027. I have a significant buyback here. The nice thing about these guys is that they generate 600 to 700 million of free cash flow a year. They're using that right now to pay down a lot of debt. They're not doing a lot of share buybacks. But I think as this period progresses, as that debt really drops to a 1 to 1.5x multiple of their EBITDA, it's not going to be a huge issue. They're going to be primed to make another acquisition and or just buy back shares. On the free cash flow margin side, I think I'm being pretty conservative here. I have a 15.7% free cash flow margin. But if you can think about their operating margin guidance for 23 and even 24, you can probably get closer to 16% to start and maybe even higher. We'll get more information on that when the Q4 earnings actually come out. But I'm going to go with 16, maybe slight shrinkage into 24 based on those investments they're making into SG&A, and maybe slight improvements going into the next couple of years. And that should be relatively conservative in my mind. If you kind of think about it this way, conservative approach to margin, relatively reasonable approach to revenue given what they're guiding, and then buybacks are in there. Very conservative approach based on my scenarios as far as free cash flow yield, and I still get a fair value that's right around today's prices. So to me, that says that at today's prices, based on these assumptions, you're talking about a 9.7% return, assuming the market doesn't really change how it values this company. If Crocs can go in there and show that in 2024 they can grow, show maybe that their guidance for 2025 is also going to be growth, and kind of show that they have staying power, that they're going to stick around and be a company that generates 600 to 700 million in cash flow and grow that any given year, I think the valuation could come down quite quickly. You're talking about a company that if you value this at a 5% free cash flow yield, it's almost a 20% total return annually, a price point of $252 in a couple of years. That's not super unrealistic, assuming they can keep up what they're doing. And that's why I like this stock. That's why I own this stock. I don't own a huge position, but it's a decent sized position. And if it's going to drop from here, if this is a little bump and it's going to keep trending down, this is a stock that whenever it's in the 80s, whenever it's in the low 90s, I buy a few shares, honestly. I try to build my position, and it's a company that I'd probably feel okay holding for the long term, because I don't necessarily think this is a fad. There might be some ups and downs, but these are pretty decent quality shoes, even if they look weird, on the Crocs side brand. They're very comfortable. They have a decent sized following, and people just like them. And the nice thing about them is that they're not very expensive. If you think about, their knockoffs, the difference between the knockoffs and the actual Crocs brand shoes isn't that huge when it comes to pricing. And I think the quality is much better on the Crocs side, based on what I hear from people who actually own these shoes. I don't actually own these shoes. Then you've got the Hey Dude brand, which again isn't knocking the doors off in terms of growth, but if they can kind of get that to $1 billion brand, which it's pretty close to, and if it grows at 1 to 2% for the next couple of years, if they can improve margins on those shoes, since those margins are a bit worse than the Crocs margins, this could be a really, really good investment, even at today's prices. At 85, it was trading at 85 just a couple of days ago. I really like this stock. Now I'm kind of in that, makes sense where it's priced. I think there's some upside if the market starts to revalue this stock based on what they're seeing, based on the consistency of their growth, based on the fact that the expectations of probably shrinkage or 0% growth for 2024 are now shifting into 3 to 5% growth. What does that mean for 25 onward? We'll hear more about that during the Q4 earnings call. I'm really looking forward to that. But right now, sitting pretty with my investment. Am I going to buy more shares? Probably not. I'm comfortable with the size position that I have. But if the stock, takes a little bit of a dip, this is a stock that, like I said, in the 80s and 90s, I'm certainly a buyer. I'm happy with the news because it shows that the thesis I had that, this isn't going to grow super fast in the next couple of years, but it generates a bunch of free cash flow. It can use that to pay down debt, put itself in a really nice position from a balance sheet perspective, do whatever they want with that money, acquire another brand, buy back shares because the stock is undervalued or they feel the stock is undervalued, and really return money to shareholders in one way or another, whether it's via stock appreciation or stock buybacks. Doubt they do a dividend or anything like that. But eventually, a company like this will probably be a dividend payer once they kind of get where they are, become a more mature company. They're getting there. They're starting to get to maturity. I think the market's always going to worry that this is going to be a company that like suddenly is going to take a left turn and Crocs are going to fall off a cliff. And this is, 70% of their business, 75% of their business. If Crocs suddenly falls off a cliff, yeah, this is going to not do well, which is probably why I'm still a bit concerned internally about making this a huge part of my portfolio. But I just don't think that's going to happen. So I'm happy with this being a small part of my portfolio and seeing it grow like this at a small clip, eventually returning money to shareholders one way or another, probably making another acquisition in a couple of years and kind of growing their base outside of just these two brands and becoming more of a multi-brand company over the next decade or so. I think good price point right here, relatively reasonable price point, fantastic price point when it was in the 80s. If you go for a 15% return, it's an $81 price point, which it was close to just a couple of days ago. Obviously, the news changed the perspective a little bit, but I think there's potential upside from here too. It's not just a 9% return. If the market starts to reevaluate this company, if it says, yeah, this is a mature company that's continuing to grow, why shouldn't this get a 5%, 6% free cash flow yield? And then you're talking about 15 to 20% annual returns. That's pretty good. That's why I own Crocs. I think there's upside here. Let me know what you think about Crocs. Are you happy about the news released today? Looking forward to the Q4 earnings call. Do you own any? As always, thank you for watching these videos. I'm nearing 1,000 subs, so thank you for joining me on these videos. Like the video, subscribe, all of that good stuff. And leave a comment down below if you want me to review anything in particular. I always read them. I respond. Thanks for watching. Bye.